we've heard, I think, admirably framed already in the opening remarks, the topics that are obviously most pressing in the context of this issue of inclusive growth from all of the remarks we've had so far. And what I propose to attempt to do with this panel is to address some of those biggest issues, the ones that we've been talking about. Obviously, the issues that are most on our minds are topics such as rising global economic tensions, trade tensions, how they might be addressed and resolved. Obviously, the issue of climate change, which is on everybody's mind. Topics that we've heard a lot again already this morning about inequality, rising inequality, particularly within countries as much as across countries. And of course, the innovation and adoption of new technologies and the implication that they have for the workplace, as well as for issues such as privacy and issues such as cybersecurity and related topics. So again, we have a lot to discuss. In 50 minutes, I think we're going to be able to come up with solutions, ultimate solutions to all of those challenges, because we have such a distinguished panel, and let me quickly introduce them. Dr. Laurence Boone is the chief economist here at the OECD, has home field advantage, I think it's fair to say, so we're going to let Dr. Boone speak first. But moving on, I just quickly want to, Bruno Bezard is managing partner with Cathay Capital, formerly of the French Treasury, of course. Philippe Houérou is the chief executive of the IFC, part of the private sector arm of the World Bank, of course, you all know that. And right at the end, Shankar Krishnamoorthy, who is with ENGIE. You have a lot of responsibilities at ENGIE, but I think in particular responsible for sustainability and also for Africa and for other topics there. So I want to get straight into the panel's thoughts. But well, I want to start with you, Dr. Boone, if I may. And before we can talk about before we can have inclusive growth, we have to have growth. So give us a sense, over the last few months, you could go back further, over the last decade or so, especially in the OECD countries, growth has been relatively slow historically, recovering from the Great Recession and the financial crisis of a decade ago. We've had a period of historically relatively slow growth. This year in particular, earlier in the summer, there were great fears that we were entering, we were entering another downturn, perhaps even a recession. You saw growth slowing in Europe significantly, in fact contraction in some of the major European economies, growth slowing from a slightly elevated rate of growth that the US had a year or so ago. Obviously China has been slowing structurally, if you like, over a fairly long period of time. We saw the reaction in markets back in the summer, in August, when interest rates, already at low levels, historically low levels, plummeted further. And of course, all of this was informed by, to some extent, these rising trade tensions and fears that the world was entering a period of significant and prolonged, if you like, deglobalization and disintegration after the period of economic integration. So we've had a lot of doubts in in markets about the global economy. They do seem to have eased a little bit in the last couple of months. Interest rates have come back up a bit. Some of the fears about a really severe downturn seem to have been eased. But will you give us a sense? Take your time to give us a sense of where you think the global economy is right now and what the prospects are over the next year or so.
Thanks a lot. It's a pleasure to be here for the second time, I think, in a row. So you have taken away the first sentences of my introduction, so I will spare you this. It is true that now for close to 2 years, the OECD has been degrading its forecast of global growth. And the deterioration is broad-based, even so it's more significant for economies where growth is more dependent on manufacturing and obviously trade. And this deterioration, you could say, is coming in part from trade policy, in part from the end of the cycle. But I think it's very important to relate it to the fact that it's more of a structural policy shift than a cyclical shock. And that's the type of challenges that policymakers usually find more difficult to address. But let me review them quickly. First, there is trade and investment rules which are changing with digitalization, with the rise of services, but also with geopolitical risks. The rise in trade restriction is nothing new. About 1,500 new trade restrictions have been implemented by G20 economies since the global financial crisis. Yet the last 2 years have seen a surge in trade restriction measures and the undoing, and that's what's more important, of a global trade order, which was in place since the establishment of the WTO. And this trade conflict and all the uncertainty that are associated with it is likely to persist, partly because they reflect the evolution of economics with the rising importance of digitalization, and partly because they reflect geopolitical movement, and I'm sure Bruno will have a lot to say about this. But altogether, this may induce a reallocation of activities across countries, an adjustment to supply chains that's both a drag on demand in the short term and also a source of weaker medium-term growth, because less openness will mean less innovation and productivity. The second thing is the change in China economic growth, which, as you know, and as most developed countries have asked for a long time, is rebalancing from an export and manufacturing-driven model towards more consumption and services. The Chinese authorities have set a very high target for self-sufficiency in certain manufacturing sector, core component or material. And they are set to reach those targets. The share of electric cars, for example, is also planned to rise to 20% by 2025. Services have grown from less than 5% in the 2000s to 25% by 2025. Sorry. I have a slight issue with my paper. It's fine, thanks. So China's contribution to changes in global growth has slowed, and it will continue to slow because it's more inward looking. And India's contribution is rising, but it's not the same degree of openness, and it's not enough to substitute to the driving engine that China was. The third point is digitalization, which, as you know, is transforming finance, it's transforming business models, and it's transforming value chains through three main channels: investment, skills, and trade. First, the rising importance of investment in intangibles, whether it's computer softwares or databases, compared with tangible ICT equipment, confer a very sizable advantage to first movers. And it creates a gap between few selected, very productive firms and the rest of them, which is dampening productivity. Also, these investments are expensive and they need to be accompanied by the right skills. And that's where digitalization also affects people and work. We know it confers a huge advantage to people with cognitive and creative skills, whereas it penalizes those whose work is very routine intensive. In addition, digitalization should help boost trade, but the diverse and complex regulatory environment, its fragmentation, especially when it comes to policies governing communication infrastructure and the movement of information across networks, is actually increasingly tightening. So this regulation is hampering the ability to reap the benefits of digitalization. So we had trade changing, China digitalization. We also have demographics, but you all know this, so I won't get into description of that. I would just like to address a final risk and something that's really affecting our economies, which is climate change. You've heard about it before, but let me just point out a couple of things. One is the number of extreme weather events is actually rising, and insufficient policy action could push the frequency of such events even higher. That means we are seeing now the impact of it. You see it in Florida, you see it in Africa, you can see it in the UK or in the Netherlands or even in Venice, I heard this morning. And that obviously may lead temporarily to perhaps short-lived but very significant disruptions to economic activity. And we all know that action plans are in their infancy. We all know that carbon tax, which is the main instrument to provide incentive to move away from fossil fuel, is a politically very difficult instrument to maneuver. and that has delayed government action. So what can we do? The first thing is reducing policy uncertainty, rethinking fiscal policy, and also start investing for all these matters. Let me tell you, and I will finish on these 2 points. First, less unpredictability and more transparency in policy discussion could go a long way to revive trade. For example, we talk about China, but there are numerous subsidies across the world that hamper trade. And tensions also arise from these generalized subsidies, such as in steel, agriculture, commodity goods. The issue of security is also hampering foreign investment, and for that we have principles guiding how FDI can comply with certain security issues. And then one, perhaps quicker again, would be more clarity on the course of the EU-UK relationship in the post-Brexit world. And second, and I think that's our main message, it's invest. Rates are at record low level, and they will be there for quite a long time. And all this transition, digitalization, aging, climate change, they require a marked acceleration of investment. So government should not only focus on the short-term benefit of fiscal stimulus, but really have long-term plans going through investment funds. We have examples of such investment funds. One is the DARPA in the US, which, as you know, is funding a host of innovation, and that's how the internet was born. Another example is the investment fund that the Netherlands is actually putting in place, 50 billion, the size, considering the size of the Netherlands, that's big, to address the issue of climate change because they can see disruption today. So if we want to move away from this low level of growth where we look really engulfed at the moment, there are things we can do, and I'm sure other panelists, we have a lot of ideas on how to complete what I've said.
Thank you. Can I just quickly want to ask you, before I move on to the other panelists, if you would, just very, very briefly, if you would, we've seen a pretty significant shift, I think it's fair to say, in the policy debate just in the last year or so, about the right mix of fiscal and monetary policy. For the last 10 years, or since the financial crisis, we've had the most aggressive and extraordinary monetary measures in most of the developed economies. You can argue about the extent to which they've been successful or not, but they haven't had significantly elevated inflation, not at all. In fact, inflation is lower in many countries than it was 10 years ago, and it's had other effects, perhaps on financial markets and elsewhere. There's a growing argument now that actually it's time for a much more aggressive fiscal approach, for fiscal policy to take up the reins of policy, given this general backdrop of relatively weak and disappointing growth we've got. We've heard it from Christine Lagarde and from others. Do you share that view?
So I think it's precisely a year ago that we actually came out with a serious downgrade in our projection, calling for fiscal coordination. It's quite simple. You look at the economic situation, you look where interest rates are, where central banks' balance sheets are, and you look what people are doing in terms of fiscal policy. And the answer is they've put all of the burden of economic adjustment on central banks. And partly because of the history of fiscal irrational exuberance in the 70s and 80s, fiscal policy has been banned from the toolbox of policymakers. But now the emperor is naked. It needs to refine clothes, and those clothes are fiscal policy. Also because wise and planned investment is actually raising trend growth. And if you look at where investment was before the crisis, where it is now, it has virtually collapsed. So yes, I think we even led this movement.
Thank you. So it's time for the Germans to do something. That's a
the Dutch are doing something, so I think.
Oh, very good. Okay, that's a journalist observation, not an official's. I accept that. Moving on, Bruno Bezard, thank you very much for being here. Give us a sense. Dr. Boone talked a lot about China, about the changes in China. It's very much obviously on everybody's mind. The United States is in the middle of a very, very, very tense series of negotiations and large, and many people think a long-term conflict with China over economic issues. I know you don't necessarily want to get into the details of these current US-China discussions, but give us a sense as an investor now in China, who's someone who's there a lot, who speaks a lot to people, the extent to which the Chinese perhaps maybe understand, respond to, and are willing to make the kind of changes that not just the United States, to be fair, but many in the West believe that China ought to make. This sense that China has maybe been a free rider on the global economy in the last 10 years, while not necessarily observing the rules of the global economy the way that others have. Do the Chinese reject that? Are they willing to make the changes that the United States and others want them to make, or are we going to really be are we now already in the early stages of an economic Cold War?
Thank you very much. I'm Bruno Bezard, I'm managing partner of Cathay Private Equity and Venture Fund. We operate on 3 continents, in America, in Europe, and in China, and in Singapore. And our business model is to invest in small and medium companies and venture and startups to help them to grow internationally. Maybe the best use of my time, following your question, is I'm not going to do any macro, because sitting next to Laurence, I wouldn't dare. But I will just maybe give you a few hints about what's going on in China. I'm based in Paris and Shanghai, so I commute with the train station, with the train, between Shanghai and Paris every 2 weeks. So I spend half of my time in China trying to work with Chinese entrepreneurs, and also with a lot of stakeholders. The feeling you have when you live even half of your time in China can be summarized with a couple of words. And sorry if I'm going to state the obvious for some of you. First of all, volume. Never forget about volume. Even though you live in China, every time you come back, you're surprised by the orders of magnitude. 2 weeks ago, I had a chat with a friend of mine who is a mayor of a small 12 million inhabitant city in China. Maybe you've never heard of this city. It's called Wuhan. He told me I have 1.3 million students in my city to take care of. This is volume. Second point, speed. Speed is the heart of the Chinese economic and social development now. Speed, everything is going very quickly. In particular in the business, speed to market is a key issue, and speed to market is a great competitive advantage in China, from which we can learn. Focus on execution. This is a big difference between China and some other parts of the world, which I'm not going to quote, for good and bad reasons. The bad reasons being that there is no checks and balances, so it's obviously quick. It goes more quickly to execute a decision if you have no checks and balances. But it does work. Huge appetite for everything in China. A better life, learning about everything, huge appetite for knowledge, huge appetite for bridging the gap. That means importing new technologies, training people to build a better future. So what is striking in China is an unbelievably, an extremely fast learning process. A couple of years ago, I attended that kind of forums, and we were discussing why there is no very popular brand in China, Chinese brand, why creativity is low, why there is no design. This is finished. China has become a creativity powerhouse. I discuss with Chinese entrepreneurs and European entrepreneurs every day, and what's going on in China in terms of innovation is just unbelievable. Chinese population is learning very fast, and the results are sometimes breathtaking. But coming to your question, my belief is that China is now focusing on its own priorities. Sometimes their own priorities can fit with the wishes that have been developed outside of China. But it's not because it's imposed from the outside world that it's going to be done. And Chinese government has been extremely clear on that. But things are moving. Let me give you a few examples. First of all, we used to view China as the factory of the world. It's finished, totally finished. Some people are still thinking about China like this, but this is totally finished, for good and bad reasons, for different reasons. The costs in China, in particular labor costs, are growing about 12 to 15% a year. 12 to 15% a year. And as I said, creativity and design are now extremely powerful in China. So China is moving up very quickly the value chain. And this is something you have to keep in mind when you go to China. Second point, rebalancing the economy. As Laurence said, this is being done. Sometimes not as quickly as we would wish, but this is being done. Look at what's going on in the current account surplus. Look at what is going on regarding the part of GDP devoted to consumption. And if you live in the country, you will see the huge, absolutely huge shift in consumer perception, consumer behavior. We have invested in a couple of e-commerce platforms, one of them being Pinduoduo, which is one of the biggest unicorn in China. It's unbelievable what's going on in China in terms of retail, and I'm convinced that what will happen in the rest of the world within the 10 next years in retail will be discovered in China, in particular how you mix online and offline. Another point is environment. You know, I've been living in Beijing 10 years ago. Every morning I got headache because of the fog, the smog, and the outside was really green and yellow, very disgusting atmosphere. It is changing. If you go to Beijing now, the level of pollution has really decreased. Even the French, French people are not always the people who would criticize less, they're a bit skeptical, a bit, Even the French people who live in Beijing will tell you Beijing now has not finished the fight against pollution, but has made huge progress. Technology. China is really bridging the gap in terms of smart technologies. It was a time when foreign investors or foreign companies were very welcome, to invest in China and sometimes to give. Sometimes they didn't know they were giving technologies. Now, China, I'm not saying is not welcoming foreign investors anymore. It would not at all. But they want to rely on their own capacity.
And if you just quickly, you just wrap up, because we've got sure. Two more speakers we've got to get through. But if I can just quickly follow up though with you on that. On the issue of technology, there is a rising belief in the United States and perhaps elsewhere too that essentially the world is going to bifurcate now into two technological, if you like, standards or camps. There's going to be the US increasingly cautious and resistant and indeed hostile to Chinese technology. We've seen it with Huawei, we've seen it with ZTE and other examples like that, and that is going to drive the world into two competing camps in technology, if you like, with two different standards. Is that from your experience in China? Do you think that is where what China understands too, and that's where China's going?
I don't know, but it's very likely. When I see what's going on in the internet world in China, with this unbelievable strength of 2 or 3 actors like Tencent, of course Alibaba and everything around, and when I see the speed at which applications and internet environment develop in China, with again huge creativity, I think they have built their own world, and it's going to be even more Chinese in a couple of years to come.
Thank you, Bruno. Moving on, Philippe Houérou. The topic of this is inclusive growth. You sit there from your perspective of the IFC, the World Bank Group. One could argue that we've had over the last 30 years remarkably inclusive growth in the sense that, and thanks in part to the efforts of the World Bank and others, the extraordinary growth that we've seen in emerging markets, in what we used to call the less developed countries, has helped dramatically to shift the inequalities, global inequalities, and to eliminate many of the global inequalities. So we've seen that, we're starting to see, obviously, even within some of those countries, particularly China, but other countries too, rising inequality within those countries too. But give us your sense from, as we've seen this extraordinary growth over the last 30 years, what now needs to be done, particularly from the perspective of, the multilateral lending institutions, and from your perspective at the IFC?
Well, thank you for that question, and I think it's a good segue with what was said on China, because a lot of the poverty reduction, if you look at where the poverty was and where it decreased the faster, was in China. So which drives the kind of poverty data very significantly if you take 3 decades. I mean, one of my first mission in the World Bank was in China in '87. It's another world, but completely. And that's a generation. I'm very old, but still, I mean, it's unbelievable. So when you look at the dynamics, so poverty has been going down. I think it's a major success since World War II. I know we tend in this conference to say there's a lot of risk everywhere, it's horrible and things, but let's say some good news. I have all the same bad news. I prepared all the same thing, but since you heard them before, I'll try to shift. The key now is if you look at the poverty dynamics, it's now more and more focused on what we call fragile states. And that's the toughest nut to crack, because they're fragile for all kinds of reasons, economic and political, and the interplay between the two. Conflict, huge, because we all take for granted peace, but it's not forever, and when it's not there, poverty increases dramatically. So I think that will be the big challenge for the World Bank Group to crack that nut in the next decade. So and most of it, by the way, it's in the Africa region. So you will have kind of in the next 20, 30 years, most of the extreme poor will be focused on Africa. So we need absolutely to do something there. And there, because I'm from the IFC, what is the role of the private sector? Because there's a lot of the private sector cannot do. We say now we try to have the private sector do a lot more things than before. In fact, we launched in IFC in the spring meeting impact investing principles, which now we have 78 big banks and PE funds and others that signed on, which is, we believe that the capitalism, especially capitalist finance part, can do a lot for improving some of the world problem by having kind of signing some principle of impact investing. In 2 words is the following. It's say, well, okay, well, the private sector and private finance in particular we can see a lot of fundraising based on impact. If you any newspaper, impact this, impact that. The problem, nobody has defined impact, which was the same problem we had with green bonds. Green bonds started in the World Bank 12 years ago. It was very small. Now it's exponential. But why? In between, what happened in 2013, we agreed on the green bond principles with the International Capital Market Association in London, and that took off. Same idea for the impact investing. So we signed and we put them together, which is very simple, which is measure what you say on the impact. So we have our own system in IFC that we have developed. We don't want to impose it to anybody, but as long as you measure beyond the internal rate of return, what is the impact? So first you have to decide what is the impact, what is the investment thesis, and then how you will measure it. And then publish, and then be open to being checked. So that is, in 2 words, very simply, but we are very happy to see that there are more and more finance organizations, again, from PE funds to large banks, are signing on to them. We have 78, and we'll have about 100 in a couple of months. So I think that's what the private sector can do, and do better, in our view. What the public sector can do is, the recipe is well known, the problem is how to do it. I mean, stable macro. We need clarity for the private sector to invest, which means regulations and the enforcement of regulations. That is absolutely critical. I know it sounds very basic, but it's absolutely critical, and it's not happening in many countries. So we need to continue pushing for that. And then finally, and it was said, I think, by the representative from the UN, I am a very strong believer that the world tomorrow, and in fact today, but we don't put the words on it, I think the world of pure private and pure public is over. I mean, not over, it doesn't, but the space is increasing for public-private partnership in everything. But how to do it is much more complicated, because it's not something you go to university, you have a class on PPP, and then you're a specialist. It's a lot of trial and error, it's a praxis more than a theory, but I do believe this interplay becomes more and more necessary if we want to solve all the problems that we've heard, from inequality to trade, to infrastructure finance. There's a huge need in infrastructure finance, not in China, but beyond. The problem is today with fiscal space in many of these countries that is limited at best or under a lot of stress, we need to find private solutions, including for developing infrastructure, what I call commercial infrastructure. There's no reason why an airport today should be financed through public debt. No way. So I mean, there I can go on forever, but the main point is, to come back to your original question, you will see extreme poverty more and more concentrated, and we need to maybe have a different mindset. And the mindset that and it's not my word, it's Kaberuka, no, it's not the Kaberuka, sorry, it's the president of Rwanda, Kagame, who used that. He said, it's time to have a change of mindset. That means from governments, from the private sector, from international organizations like ours, to do things a bit differently. So I can go on forever on what differently, but we believe that there is a way forward, difficult, but there's a way forward.
My follow-up to you very quickly is, you mentioned fragility in certain countries, particularly in Africa, perhaps being fragile economies, fragile governments, if you like, fragile political systems. We've seen this remarkable surge in the last 5 years of populism, as it's called generally. You know, a lot of attention obviously has been paid to Europe, Brexit, North America, Trump. More recently, we've seen some kind of manifestations of it, you could say, Argentina, you know, Mexico. I mean, we're seeing all these protests around the world, even in countries like Chile, which has had a pretty, you know, generally pretty prosperous run. Is this, and look, what's driving it, obviously, is large-scale discontent with what are seen as inequalities and unfairnesses and inequities in the system. I wonder, as you look at that, and you look at that, for putting aside what's going on in North America and Europe, and you look at these demonstrations around the world and some of these governments, like the new government in Argentina, how much of a risk does that pose to economic stability, and indeed to the very goal of eliminating some of these bigger global challenges that we face, do you think?
I don't think it's possible to have a clear answer to this one. I think there's a multiple layer. First of all, I mean, these protests have to be taken into account seriously. Why the protests? I think there's a number of reasons. One of them is something that sounds very pedestrian and maybe crazy, but I believe it's true. Today, compared to 30 years ago, you live, let's say, in South Africa or Chile or wherever. You have your cell phone, you can see how other people live, and after all, they're human beings like you and me. So why it's this discrepancy? 30 years ago, there was not this question because there was not this capacity to compare. So all of a sudden, the relative comparison has changed. Before it was compared to your neighbors. Now it's compared to your neighbors, but in Bethesda, Washington. So all of a sudden you can see, because of the internet, this kind of gap between, oh, that's where I am, and that's how the rest of the world mean dominated by Western because of the internet. So that, I think, is something that didn't exist 30 years ago or even 20 years ago, that we see. And then second, there's real, I mean, Guria said it, I mean, the inequality is increasing across the world, but within countries. And we need to do something about it. Now, what to do? Redistribution, but also growth. And the tension is it's very famous about, the creativity, productivity versus redistribution. You throw that, the trade and robotics and the new technology, the equation becomes very quickly very complicated. But I think that these are these two levels. So listen to what these protests are saying, try to analyze, take out what you cannot do much about. I mean, if you live in a country of the $10,000 per capita, it's not a country of $50,000 per capita, and there's very, very difficult to bridge this gap. But then explanation. I think that the time for more transparency in public policy is more than ever critical to unbundle what are the issues, what can be done about it, what can I do as a government official, what can I do as a private company. I think that it will be time to have communication, a different way of communicating the issues and hence the solutions.
Thanks, Philippe. Moving on, Shankar Krishnamoorthy. Climate change, obviously, sustainability is absolutely the forefront of everybody's minds. It looks as though, and Laurence mentioned this a little bit, that the pressure, both perhaps from the climate itself, but increasingly from peoples and movements around the world to be even more aggressive than the goals that the major countries have committed to, is rising. That pressure is rising. Tell us from your perspective what's being done, and obviously this has enormous implications for global inequalities, and we're all familiar with the arguments that countries like India and many countries in the developing world have had about the fundamental unfairness of some of the objectives that are being placed on them. Give us your perspective about on this issue in particular, about how we can move quickly towards addressing some of these big challenges.
Okay, so thank you for the question. The first thing is, no matter who says what, most people understand that there is a climate change problem, and if it is not addressed quickly, it's going to have consequences. People might walk out of deals, etc., but at the end of the day, there is climate change is understood. I think the first thing that probably needs appreciating a bit more is other dimensions in the short and medium term. And I'm talking about economic, social, and human aspects of wanting to address climate change. So if you move from where we are today to something which is more sustainable world, you've got to take a way in which we should always consider the fact that there will be economic, there will be social, and there will be human aspects to it, and they need to be addressed properly. That's the first thing I think we should be understanding and doing. You mentioned about doing things differently. I put it another way. So the companies of today or the policy makers of today should be looking to, let's say, re-engineering themselves, and as someone earlier said, be more bold. So when I look at my own company, there's somebody using a lot of fossil fuel some time ago, and we not only are reinventing ourselves as someone who produces cleaner electricity, but we're using our knowledge, we are using our resources, we're using capital to actually make our clients reduce their carbon footprint. It's a lot of re-engineering that we have done to our processes, our business models, etc., to make us look like, be a different company than what we were, and it has taken some doing. It's a lot of risk-taking. It's being bold. So I would expect that the companies, the policyholders, don't just continue to do what they did in the past. They do it differently, are a bit bolder than what they were in the past. So that for me is very, very important. I would add one more thing, which is like co-working or co-creating. So what often happens is that when you address a challenge such as, say, climate change, you need a lot of technologies at the end of the day to solve your problems. You need a lot of business model innovation that has to happen, and these don't happen just like that. You need a lot of resources that get wasted in the process of creating a new technology. So now, and also the same thing with business model innovation. So what must happen is that companies should work together, even if they are competitors, for a period of time to invent technologies, and later, of course, use those technologies to compete with each other. That's not a problem. When that is done, you'll free up a lot of capital to speed up the pace at which the technologies are being invented, and we can take the world towards a more sustainable future. I think I take the example of car manufacturers. In Europe, they've joined hands to have the same bunch of ultra-rapid chargers rather than each trying to have his own. It's a good example of saying, look, I'm pushing electric mobility. None of us is capable of investing into superchargers everywhere. Why don't we join hands? It's an example. One more thing I always say is that there is no, say, one solution to solving, say, climate change issues. People have started to tell themselves, for example, that, you know, you got a great amount of success with renewables. Everybody understands wind, solar, etc. And even though they have intermittency issues, batteries will arrive and clean the whole thing, and therefore electricity is the only way forward. I think it's wrong. It's a bad idea to bet on just one solution. It's never going to work. So I always suggest and recommend that the same way that we have pushed the renewables in the past, the states have done it, the companies have taken the risk, etc. We must do the same for other things, such as, you know, CO2 sequestration, having products made of CO2, pushing biogas, pushing green hydrogen. These are very good alternatives. They need to be pushed the same way renewables got pushed so that we have more than one solution. One more thing I could mention is that, okay, all the companies have their financial objectives, all of us have. What needs to be done is that while meeting those financial, say, objectives or expectations of your owners, you must be able to, at the same time, have your own targets for, say, a carbon footprint reduction. You must have a plan for it, you must state it, and meet them, even while meeting your financial objectives. And one more last thing I would like to say is that technology investments are very important, they are very expensive. So all companies must support, you know, taking risks on technologies, because that's the one that's going to solve a lot of our problems. So those are, let's say, a list of things that I believe companies and policymakers should be doing to have a smoother transition to a more sustainable world.
Thank you, Shankar. We have a few minutes remaining, so I want to address a couple of the other issues that we haven't been able to address. First is this issue of the adoption of technology, in particular artificial intelligence and machine learning, which is becoming such a big issue. I think it's one of the main factors that is driving so much economic insecurity, which is resulting in some of the political uncertainty and some of the political disruption that we've seen. Are we doing enough? First of all, are the fears that people have that they're going to be put out of work by AI justified? We've seen different estimates as the number of jobs that are at risk. And secondly, what are we doing enough to prepare the workforce and to prepare our economies for this? Kind of quickly, I'll ask each of you quickly, Laurence, if you would, and we've got a couple of minutes, so just a very quick answer.
Thanks. Well, obviously we're not doing enough, otherwise we wouldn't be here. The first thing I think in terms of works and jobs, what's really changing is how it's impacting, how it has been impacting the middle class. You know, before in the first wave of technology, it was more lower skilled people. Now it's everybody, and especially the medium class, the medium skills. So first is education and throughout lifetime. The other thing about adoption of technology, I really like what Philippe was saying about, you know, change your mindset and work better in partnership with private firms. We all know that the one who invested first have a huge comparative advantage. Look at the market cap of the GAFA. So there's certainly a lot that the government can help to diffuse innovation, and that starts with rethinking competition and recreating business dynamics. And on this, I think there needs to be a big, big push.
Bruno, quickly. Very quickly.
AI is going extremely fast in China for a couple of reasons. First, the volume, massive country. Two, they're very good at it. And three, there is no data privacy regulation.
I think just to
yes, quickly, Shankar.
Yeah, just to sign off on a somewhat positive note, even though the energy sector didn't quite take to AI as early as others did, but if you look at the 2018 numbers, the investment into startups which deal with AI went 10 times in 1 year compared to the previous year. So there is a certain speeding up, but sure, I agree with you that we aren't doing enough.
One final question again for all of you is, in all of these challenges that we're facing, whether it's technology or climate change or challenges of inequality, Again, we're obviously, to take your point, Laurence, we're obviously not getting it right, otherwise we wouldn't be talking about it. But I want to know what you think of the role, and perhaps particularly for you, Philippe, given your role, how much of a role the private sector, the balance of the private sector versus the public sector, whether it's climate change. We've seen a massive growth in impact investing, ESG, real interest in that, in real market-oriented yield-producing solutions. In that, obviously, AI is dominated by that, and more market attempts to address some of these social implications of whether it's education or health. Philippe, I'll just ask you, how much more of the burden can the private sector take on, and how much are we going to fall back on the public sector?
Well, it's a tough one because they are mutually interdependent. So, I mean, depending on what the public sector does, the private sector will adjust. But I think we have to remember one thing. Private sector is all about risk return. So there's two things. If the returns are not there, you better lower the risk. Or there will be no investment. Angel was right. I mean, we need to invest. And so the point is, yeah, but to invest is to lose money. It's not a very good proposition. It's not sustainable. So fine. So what do we do? So the public sector should reduce the risk. And you can de-risk countries, sectors, companies. And you can have tools, you can have regulation, you can have the macro, and it can go very deep. So, and then the private sector should be a little bit more bold sometimes to take this risk and use different way of, there is new way to structure. Maybe I'd like to share a thing that I witnessed over the last 3 years and a half that I've been in IFC. Frankly, today, I don't see a problem where there's a lack of finance for a good investment. I have not seen in 3 years and a half. What I see is lack of bankable projects. So I think that's, and there again, PPP is maybe one of the way forward. We need to design more bankable projects. And the way to do it is to start thinking a little bit differently again, where institutions like mine, the IFC, instead of just financing a project and structuring the finance in a difficult environment where we're focusing on developing countries, is to start generating ideas of projects, which means having an objective, a strategy for a country, what are the needs, and can these needs be translated in a private solution that can be then financed with these risking instruments of all sorts. But I think that this shift of mindset is also important for our own institution.
And Shankar, I'm going to give you the last very brief word.
Very quickly on the risk reward. I mean, it's okay, it's a very nice generalization of the fact that private sector is all about risk reward. But I would also say that we now tend to, in our discussions, we come to the conclusion that doing something that is good for the society is also good business. So it's not, yeah, it's changing, but
Thank you very much indeed. Ladies and gentlemen, I think we have in 40 minutes solved all of those problems that we talked about. So if there's any reason for you to continue to talk about them, then please do. But in the meantime, please thank my panelists for a really excellent conversation.